This podcast is for informational purposes only and does not constitute legal, tax, investment, financial, or any other advice. It is not intended to cause or induce breach of any existing agency agreement. All right, guys, welcome back to the show. Cole and myself are both really excited to kind of present something to you guys in a little bit of a different episode here. So this is what we're calling like our first time home buyer seminar. Setting you up for success in home ownership. We talk so much about, okay, once you're in the market, what's going on, all this kind of stuff. So we wanted to take an episode here to kind of take a step back and say, hey, look, maybe you're thinking of entering the market in the new year. Maybe you're thinking of entering the market in general, maybe not just in the new year. You know, maybe that's 6 months from now, 8 months from now, a year from now. We talk so frequently about very high level things of like, okay, you know, this is what's going on with rates. This is that. But we wanted to take an episode to just basically talk about, okay, what is it that we do on a day-to-day basis with, you know, getting pre-qualified? What does that look like? You know, what does a real estate contract look like? All that kind of stuff. So this is kind of your walkthrough of from start to finish, what you would be doing if and when you work with us. So this is our first time home buyer seminar. Thank you for joining us. What we'll be kind of touching on today, there'll be a little bit about us for those of you who don't know, or maybe this is your first episode listening. If it is, welcome to the chaos that is the Full Subjects podcast. We'll be talking about the buying and selling process, why now is a great time to buy, some must-knows, some frequently asked questions that we get, as well as our contact information. If you have any questions, you can reach out to us after. So a little bit about me. I'm Austin. I'm a realtor with Royal LePage Wolstencroft. I deal with or specialize, I guess, in first-time home buyers, upsizing, as well as downsizing, as well as helping others navigate changing markets. We've talked about this in other episodes. I'm a proud dad. I was very fortunate last year with the Langley Advanced Times. I was voted Langley's favorite realtor in the Business Excellence Awards. This year, I came second. Heartbreaking. I was the first loser, but very proud to be a finalist. With that, I take a lot of pride in what I do. It really stems from, I remember when I purchased my first place, I had no freaking idea what was going on. And I say that sarcastically, but you think about what is entailed with purchasing a home. And yeah, it is a big task. And that's also why you have people like Cole and myself helping out. But there's a lot of moving parts, and I kind of felt like at the time I blinked and it was done, and I had bought a place, and obviously there was so many things that went on in the background. But my goal ultimately is to just help educate and help you understand the process so you know what's going on and you feel confident in that process.
Yeah, and a little bit about me. I'm a mortgage broker with Dominion Lending Centers. A few of the things I would say I specialize in are first-time home buyers, self-employed individuals, in particular different products that we can look at for them, and really maximizing income and being able to qualify for as much as possible. And then the last thing is accessing the equity in your home. There's a few different strategies that we can use. Actually, Austin and I don't have we released that episode yet, Austin?
That one will be coming up next Monday.
So that one's
it'll be out by the time that we listen to this. It'll be episode 65.
Okay, perfect. So we actually did an episode about this and trying some different ways that you can do that. So keep your eye out for that. Like Austin, I'm a proud dad and a big sports fan. My son is inherently a Canucks fan. Hopefully he'll get to see something that neither Austin and I have seen in our lifetime. But yeah. I don't quite have the same accolades as Austin, but I'd like to proudly announce that I have been the broker of the month a couple times at my brokerage. So I'm gonna hang my hat on that. And the other photo there is my wife and my son. So I just wanted to include that as well.
What I'll say as well, as much as Cole does not have quote unquote accolades that he's able to share right now, I've been very fortunate and privileged to work with Cole on a couple transactions with mutual clients. And he is an absolutely kick-ass broker, really great at educating people as well as weighing all of the options. It's not necessarily about just the best rate, which Cole will be talking about. It's about the best mortgage product. And he's fantastic about kind of explaining all of the differences, letting you make a decision, but also helping you understand exactly what you're signing up for So if you like to be, or if you are somebody that likes to kind of understand what's going on and be educated and learn through the process, like with a bullet, number one, Colt is going to be your guy for that.
Appreciate that. Thank you. I like to call this Mortgage 101. So we're going to kind of get into some different information about how mortgages work, some different types of mortgages. We'll keep things fairly high level, but my goal is to have you leave this either video presentation or audio presentation having a little bit of a better understanding of, okay, I'm ready to buy a place. I'm going to go through the mortgage process. What can I expect that to look like? And how do I navigate that? So that's gonna how we're gonna summarize things here. Next slide, please. So working with a broker, this is a really important thing that I want to talk about before we get into more of the how does mortgages actually work. So as Austin mentioned before, I obviously I do work as a broker, but what do I actually do? So my job is to represent the client. What I'm trying to say, your interests are my interests. So I want to make sure that you find the best product for you, and that ultimately means that I will get compensated for that. So I work with you not only through the buying process or through the renewal process, assuming you're renewing a mortgage. I work with you for as long as you have a mortgage, quite frankly. My goal is if there's opportunities for you to, say, refinance a mortgage, or in some cases even break your mortgage early because you might save you some money, I'm gonna look out for those opportunities for you, and I'm gonna reach out to you. And I can almost guarantee you that if you go straight to a bank, they will not do that. They're not going to contact you and say, hey client, this is the situation right now. We have some opportunity to save you some money. Here's what it will look like. Is that something you're interested in? That's probably not going to happen. So that's something you get with a broker. It's not just, hey, here's a mortgage, see you later. It's an ongoing relationship, and I will support you through all the questions you have and anything that comes up in the future. All right, so let's talk about what we're going to actually cover here. So what is a mortgage? We'll talk about what that actually is. How do I get a mortgage? I think that's probably the most important thing. Pre-approval versus an approval, and what the differences are, why both things are important, especially when you're starting to look for a place. Incentives, because as many people that will listen to this are going to be first-time home buyers, it's nice to know how you can save some money. So we'll look at those. And then the last thing we're going to talk about is how do you make sure that you protect your family and yourself in case something bad happens. So we'll talk about that too. So what is a mortgage? I mean, the simplest way to put it is it's a loan. It's a loan that you get from a lender in order to purchase a home. But the nice thing about a mortgage is it can be a lot more than that. So when you're first buying a home, a mortgage is more or less just that, because it allows you to borrow money in order to purchase a large asset that eventually you will likely pay off and own that asset. But once you've had a mortgage, it can actually be a really strong tool, because you can add other debt to that mortgage. You can use some of the equity in your home to get a larger mortgage, and then you can use that equity to do other things with. But ultimately, it's a loan. It allows you to purchase an asset, and quite frankly, it's a pretty low rate for a loan. Typically, loans are a much higher rate than mortgage rates, so I find it to be good debt. Some people may disagree with that, but I think it's a good way to utilize debt as long as you utilize it effectively. All right, so this is probably the biggest question. How do I actually get a mortgage? So to simplify this, really what you have to do is you have to talk to somebody that can help you set that up. So that would be me in this case. And you have to go through a mortgage application process where you'll provide information, you'll provide documentation, and then you'll ultimately apply for a mortgage. And then from there, you'll either get a mortgage or you won't. Obviously, my goal is to help everybody get a mortgage, or at least point them in the right direction, or build a plan so that they can get to a point where they can get a mortgage. But let's go to the next slide, and we'll talk about some of the things you need in order to get to a mortgage. So the first thing I want to talk about is credit, because it's something that you need in order to get a loan. The thing to remember here, if there's any takeaway from this specific slide, is the 2-2-2 rule. So what that means is you need to have at least 2 credit accounts. There's some examples here on the slide, but I'll just mention a couple. So credit cards, line of credits, car loans, other types of loans. Each of those credit accounts has to have at least a $2,000 limit, and then you have to have 2 years of making payments on those loans. So when I say making payments, minimum monthly payments count, but there has to be a history of making consistent monthly payments. And that's how you build credit. And you need credit in order for institutions or banks to want to lend you money because you've shown, hey, I can borrow money and I can pay it back. And once you've established that consistency, you're more likely, or you're going to have a better chance of being able to get a larger loan like a mortgage. Okay, minimum down payments. This is important too because we've established that you've got credit now. Now how do I actually figure out how much money I need to start looking at getting a mortgage? Because a mortgage is great, but you still need to have a down payment in order to make a purchase. The minimum down payment requirements, again, they're on the slide here. Typically, it's 5% on the first $500,000 and then 10% on the remaining balance up to $1 million. There are some changes happening in December. We won't get into that, but I think that's really the most important thing. Minimum 5% on the first $500,000.
So for context for that, for those listening right now, let's say you were wanting to get into your first place, and let's say that is a condo in the 500 grand range. Mm-hmm. You'd only need $25,000 to get in. If you're looking at a condo that's $400,000, you would only need about $20,000 in order to get in. I think people think that they need a much larger amount to get in. Obviously, you need to be able to qualify for the mortgage, which is the second part of that. And I'm not saying that $25,000 or $20,000 isn't a lot of money, but then all of a sudden, with that amount, you can start, investing in an asset and get yourself into your own place.
Yeah, that's a great point, Austin. And one more thing I'll add to that is you don't have to be a first-time home buyer to have a minimum 5% down payment either. So keep that in mind. Just because you purchased a home before, you still have the opportunity to do a down payment less than 20%. 20% is typically a number that gets not thrown around, but a number that people tend to kind of hold on to. It's like, oh, I need 20% down. No, you don't. And I mean, we live in a place where homes are very expensive. So coming up with 20% is tough. And that actually transitions really well into our next part. So down payment can come from a few different places. Savings is obviously the most simple one. You save money. Once you come up with the down payment, now you're in a position to apply for a mortgage and hopefully purchase a place. The other place that it can come from, and it's a lot more common now, is a gift. And gifts can come from direct family members only. And those are the rules of mortgage lenders. In order for it to not be considered a loan given by a friend. Typically, I don't want to say typically, but a large portion of buyers, especially first-time home buyers, do get a gift of some kind. It's not an option for everybody, of course, but that's another really important reason why what Austin said. You do only need 5% down. So if you're looking to just get into the market and you have some savings, there's still a way to get in with, say, $20,000 to $25,000 without needing a gift from a family. Now, the other thing that's worth noting is, can you borrow a down payment? So I mentioned that gifts have to come from direct family members, but there is ways that you can actually borrow part of your down payment. It will impact how much you can borrow as a mortgage loan, but there is ways to do this. And I think that's another reason why you should talk to a mortgage broker or talk to a professional that understands the different opportunities there are. And they'll be able to point you in the right direction and say, hey, this is something we can look at in order to get you in the market if that's something you want to do. So just know that there is an opportunity to borrow a down payment as well. So yeah, I mentioned before, ultimately it's going to lead to a mortgage application. So we've established that you have credit now, you have a down payment that you need. Those are kind of the first two big things. And then once we know that, then you would actually go through the application process. And just as one more thing, prior to that, I would meet with you and we'd have what we like to call a discovery call, where we learn more information about you. We figure out, okay, what are you trying to do? And then from there, that leads to an application. You submit that application and then you provide documentation to support that application. And then from there, we take it to the next step. Q Austin. Pre-approvals versus approvals. So what is the difference and why does it matter? So Austin, if he's going to take somebody out to buy a home, he's going to want to know that they are qualified or that they at least are in a position where they can afford to purchase the homes that they're looking at. So if the buyer comes to Austin and says, hey, I really want to buy this $1.5 million home, but they're can realistically only afford 750, he's going to say, are you pre-approved? How much are you pre-approved for? And that's going to save both Austin and the client's time, because if their expectation is, yeah, I can afford a $1.5 million home because that's the home that Austin's showing me, when realistically they can't, that's not going to go well. It's not going to make anybody feel good, and it's going to ultimately lead to a lot of disappointment. And that's why Austin will likely, when he talks to you, he's going to ask you, are you pre-approved? If you're not, talk to Cole and we'll get you pre-approved so that we know what your budget is before you start shopping. So let's go to the next slide, Austin. So what is a pre-approval? So a pre-approval is it's qualifying you for a mortgage without getting a full approval. So what that means is you'll submit the application, I'll look through it, I'll make sure that all the information makes sense, I'll verify your documents, and then I'll submit it for a pre-approval, which then gives you the confidence to start shopping. The most important thing to note about pre-approval versus an approval is that a pre-approval doesn't guarantee you anything. It's not a mortgage lender saying, hey, you can go out and get this mortgage. They're saying that based on the information you've provided, as long as you verify that information and as long as nothing changes, there's a very good chance that you will get approved. That's the way that I like to look at it. And the nice thing about a pre-approval is it comes with a rate hold. So you can hold a specific mortgage rate for up to 120 days, which is awesome because if rates are going up and you're able to hold that rate, there's no risk of you missing out on that rate, assuming that you purchase in 120 days. And the best part is if rates go down, you can still get the lower rate. So you're just protecting yourself from rising rates. Another reason to always get a pre-approval. So what's an approval? An approval is it's a step further. So now you've purchased a place or you have an accepted offer on a place, and you're now going to get an approval where now we're going to submit formal documentation to the lender. We're going to meet all of what they call their conditions. And once we meet those conditions, then we're going to get an approval. And that approval will then lead to you getting a mortgage, and that'll lead to you completing on the purchase of the home. So if there's any takeaway here, a pre-approval is what you would get before you start looking, and approval is what you get once you have an accepted offer. All right, incentives. This is something that's really important. It is strictly tailored to first-time homebuyers, but what's nice about this is there is ways to save money, or there's ways to access money, certain money that you have saved, in order to boost your down payment or in order to just get into the market. So the first one is an example of that. It's called the Home Buyers Plan. It allows you to take money out of your RSP, which you can always do, but typically what happens is you get taxed on it because it's seen as income. But under this plan, it's not treated as income. It's a tax-free withdrawal. The requirement is that you start paying it back within 2 years, but you don't have to pay it all back. You only have to pay small amounts of it back into your RSP, or else you'll start having to pay income tax on it. It's a great program because lots of people do use RSPs because it can give you tax advantages, and being able to access money from an RSP is not always the best approach because, like I mentioned, it can come with income tax. First home savings account. This one, Austin and I can probably both agree, is an awesome product. It's quite frankly the best savings account there is. It's not available to everybody because if you've owned a home before, you can't open this account. But what it is it operates like an RRSP. So as you contribute money to it, you get tax credits for it, which is great. So it saves you on your income tax. And then when you withdraw the money, it's completely tax-free as long as you use the withdrawal money for the purchase of your first home. So, I mean, there is no better investment account than that, quite frankly. And there is a limit. You can contribute up to $8,000 per year. And there is an overall limit of $40,000. So assuming you put in $8,000 over 5 years, you'd hit your limit. And there is some ability to carry money over year, but if you want more information about that, we can talk about that. first-time home buyers program. You'll notice these names are very similar and they love to use acronyms. This one is something that Austin and I would say almost collaborate on a little bit more because of the fact that it has to do with property transfer tax, which we're both very well aware of and understand really well because it's something that happens in almost every transaction. So property transfer tax is a tax that's added to any home transaction, but there is a way to save on that if you're a first-time home buyer. So there's an exemption limit. I believe the limit right now is $835,000 for a full exemption on an existing home, and I think it's $1.1 million on a newly built home. And then there's a bit of you can still get an exemption above those numbers, but the amount of the exemption decreases as you go to a higher purchase price. But yeah, property transfer tax is a major expense. It's something that you have to pay upfront. You can't borrow the money to pay for it. It's money that you essentially have to take from your down payment in order to pay. And the amount, we won't go into the specifics of that, but you can expect to pay $5,000 to $10,000 if you don't have an exemption, if not more, depending on the purchase price. So last incentive, home buyers tax credit. This is something that's more so tailored to talk to your accountant, but a lot of people file their own taxes and they'll go on a tax offer like TurboTax, for example, and it'll say, hey, have you purchased a home in the last year? Would you like to claim this tax credit? I mean, you should, in my opinion. It's tax credit that you can get back up to $1,500. It can be split between two people, but yeah, I mean, it's free money. So I recommend taking advantage of it if you qualify for it. So the last thing is to be protected. And people are like, what the heck does that mean? There's an image on the screen here and it shows insurance. So what I'm talking about here are life insurance options. As a broker, I have the ability to offer what we call mortgage life insurance, but I also hold a life insurance license, which probably sounds confusing, but there's different types of life insurance. So if you skip to the next slide, Austin, so here you'll see there's mortgage life insurance and life insurance. The big difference being mortgage life insurance is used to pay off the mortgage. Life insurance is used to pay off whatever the heck you want. So there's just more flexibility with life insurance than there is with mortgage life insurance. I think either option is good. You can do a combination of both. My preference is life insurance simply because it gives you more flexibility. If somebody was to pass, you can then use that payout amount to say pay down your mortgage, maybe pay for funeral costs, et cetera, et cetera. Mortgage life insurance, as I mentioned, will pay down the mortgage, but it won't allow you to pay down other things if you have other costs that you need to pay down. All right, so that's all I've got. So yeah, in summary, getting a mortgage is not a complicated process, but it is a lot easier if you have somebody that's working with you through that process. And now I'm going to leave it to Austin, where he'll talk a little bit more about what actually happens when you start talking to a realtor and start looking at places and kind of how that process goes.
Yeah, thanks for the handoff. So yeah, I'll start it with, we all need to live somewhere, whether we're living with family or maybe we're in a rental. I think most people, if you're listening to this, your goal is to probably, own your own place one day. So yeah, we all need to live somewhere, and that somewhere is going to be different for everyone. There's an old Will Rogers quote, don't wait to buy real estate and wait. And, historically, we've seen that not only is buying a home, a place for you to live, it's also an asset that will accumulate in value, which is always great. So not only are you paying down that mortgage or making payments on that mortgage, you're also purchasing something that is going to increase in value over time, as opposed to decrease in value over time. I mean, in some cases, of course, I guess a home could decrease in value, but over a long enough time horizon, historically, you've done pretty well in real estate, and I'll show that on another slide. So what is a home? For everybody, that's going to be different. Maybe you're wanting to live in the city. Maybe you're wanting to live downtown. Maybe you're wanting to live with nobody around you. So I've got this picture that you won't be able to see if you're listening on the podcast. of, a home in the hills separated from everybody else. That looks pretty nice. Maybe you're wanting a place with a pool. Maybe you're wanting a townhome where you've got, connected neighbors. Maybe you're wanting a waterfront property. So home is going to be different for everyone. And with that being said, your first place also isn't your last place. So maybe, that condo is going to be a stepping stone for you to get to that, place where there's no one around you, maybe living in the hills, all that kind of stuff. So why buy a home? So this graph, this is from earlier this year. This shows home price index. So HPI price, historically in the Fraser Valley. So in January of 2005, HPI price for a home was $301,800. That was obviously almost 20 years ago. And then when we took the screenshot from this graph, that HPI price for that home was sitting just over 1.5 million. That's a pretty big increase over 20 years. And as much as there's been slight increases or slight decreases over kind of a 10-year span in each of these different segments, you're probably going to see an increase in the value of that home. Which is great. You're going to also see that through the different asset classes. So your condos, your townhomes, and your detached homes. You'll notice, again, if you're watching on video, that those trends are pretty similar. You're going to see the more dramatic changes in your larger asset classes, like your detached or your townhomes, are going to have wider margins than your condos, as an example. But this just shows that, it kind of follows suit. When you see one asset class increase, that typically puts people in a position to maybe jump to the next asset class, and it's all relative. So, fortunately, Cole has touched on a good chunk of our timeline of the process of, purchasing a home. So first thing you're going to want to do is meet with a mortgage professional. You're going to call Cole, make sure to call Cole, and then he's going to help you determine your purchasing power. From there, you'll start to, once you know what your purchasing power is, you'll start to kind of create your wish list, and this will go hand in hand with your budget. So what can you afford? What does that look like that you can purchase? And then with that too, maybe your criteria is going to adjust. So maybe you're willing to, change your desired area if that means that you can stick to your budget. Maybe you're going to want to change your desired area so your dollar goes a little bit farther. So maybe you're commuting more, but you can get a bigger home. So those are all the things that go into your wish list. And once you start to nail that down, it's going to be time for a tour. So your realtor will take you out to actually look at homes to find the right one for you to purchase. Once you, find one that you like, you're going to decide and write an offer. From there, there'll be due diligence and subject removal. I'll talk more about that at the time. We'll talk also what happens after you remove subjects, and then completion and possession, which is when the transaction actually happens and when you actually move in. So we'll talk about that at that time and what that looks like between you writing an offer, you following through with your offer, and then you actually getting the keys and having your family and friends over to see you. So your pre-approval, Cole has already touched on a good chunk of this. So, he'll talk about what is required, what is important. There'll be disclosures and representation. He'll also nail down your deposit and then down payment. Deposit will be important when you're writing an offer. I'll chat about that in a little bit. And then from there, when we go to representation, you'll meet with your agent. So you'll meet with somebody like myself or Cody or another realtor. God, that hurts to say. Just kidding. There'll also be some representation and forms that you'll fill out with me as an example. So you're giving me some of your private information. I have a duty to keep that confidential. I have a duty to avoid conflicts of interest with that. And I have a duty to work in your best interest above anything else. So once we start to nail down some of that stuff, we'll work on your criteria. We'll have conversations of what exactly you're looking for in your new home. So some of the conversations, just to keep it very surface level, if I'm chatting with Cole and he's thinking of buying his first place, I'll be saying things like, okay, what area do you want to live in? How long do you plan on being in this home? Or do you prefer a newer home, or do you prefer, maybe something that needs a little bit of work that you can do some renovations to? Do you have a preference on that? If you're looking at moving into a condo, are you okay with being on the bottom floor? Are you okay with being on the top floor? Are you okay with one of the middle floors? Do you prefer, a concrete building versus like a high rise versus a wood frame building? There's so many different things that will go into that criteria. And this will also change as you are searching. So as an example, I've had clients before that I work with, we go looking at condos and they have a dog and they think they're going to be okay with something on the second and third floor. We go view something on the ground floor and they're like, we want a yard so that we can let the dog out right away. So pup is, kind of determining your criteria and helping out with that, which is great. Or, you'll maybe find neighborhoods that you like more or complexes that you like more. And maybe you'll wait for a specific unit as opposed to, just picking what's out there at the time. So there's lots of things that will go into your criteria. And our goal is to, find what makes the most sense for you. With the wish list, are you looking to move into this for yourself? Are you purchasing to rent while you still live at home? So one of the things we talked about at the beginning is what's required for a down payment. If you're planning on moving into something on your own, you can have less than 20% down. If you are looking at purchasing your first property as rental, that will require 20% down. What do you want versus what do you need? And what I mean by that is your first place isn't your last place. Are you just looking to be out on your own and have your own space? Or are you wanting, or are you needing more space? Are you needing 2 bedrooms or a 1-bedroom and den? Do you work from home? All of this will kind of help nail down your criteria. The conversation I'll also have with people too is, how long do you plan on being in that first home for? Are you looking to get into a place where you maybe plan to start a family, where you're going to need more space in the near future? Because that will change. The last thing I would want to do is, if a 2-bedroom or a 3-bedroom place is within your budget, maybe it makes more sense to, shop near the top of your budget in order to get into that place so that when you start to expand your family or you need that more space, you're already there. And maybe you can be in that place for 5 years or 8 years versus if you're just looking to get out on your own and then maybe move again in the future when you meet somebody or anything like that. Maybe just shopping for the 1 to 3 year plan will make the most sense. And with that timeline as well, that'll probably also help Cole be more prescriptive with, the mortgage options that he's giving you. Saying, hey, we don't want to be in a 5-year fixed rate if you plan on moving in 3 years because there'll be a break penalty or something like that. So all of these different factors will help us guide ultimately to when we're viewing homes. So we've figured out our budget. We have nailed down what we're looking for. We're going to actually get in the car. We're going to be driving around and viewing some of the different homes and listings that you like. We're able to, as realtors, set up what's called like a collaboration center. So we input online all of your criteria. So whether that's your budget, your square footage, your areas, all that kind of stuff, we put this into a program connected to your email, and it will send you and create a custom website that will show you everything that is available within your criteria and your budget. And you'll be able to go through and look at all of these different homes to find out which ones you like and you want to see in person versus which ones maybe you'll pass on for one reason or another. Once you find a home that you like, we will look at putting together an offer or writing an offer, which is exciting. So with that, when you are chatting with your realtor, there'll be a couple things that you're talking about. So your dates, so completion and possession. So you're writing an offer today. Are you going to be moving in tomorrow? Probably not. That could be 30, 60, 90, 120 days from now. So that'll be a conversation that we're having with you as well as the other party, because if somebody is living in that home right now, they're probably going to need time to move, time to find something else, depending on their situation. And all of these different things come into factor when we're writing an offer. There'll also be something in your offer called subjects or conditions, most likely. So that'll be something that needs to be satisfied before you follow through with your purchase. We'll also be talking about included items. So fixtures versus chattels. Love a good typo there. Probably didn't need to mention it, but here we are. So what is a fixture and a chattel? So as an example, if there is a TV mount or something that is mounted, the last thing we would probably want as a buyer would be people unhanging shelves and taking things off the walls and all that kind of stuff. So we'll be having discussions on what would be included in your purchase versus not included in your purchase. So as an example, if you move into a place, you're probably going to want your fridge, your stove, your dishwasher, your washer and dryer, as opposed to moving into something and having to buy all new appliances. All of these things can be negotiated. So every situation is different, but that will be something that we are having a conversation about. We'll also be talking about your deposit. So a deposit is typically around 5% of the purchase price when you remove your subjects, which I'll talk about on another slide. Basically, you submit that as a sign of good faith that you will be following through with the purchase. That gets held onto by the realtor's trust account, or the brokerage's, sorry, not the realtor's, the brokerage's trust account. We'll talk about that. The other terms in your offer, so making sure that maybe you want that unit to be professionally cleaned before you move in with all of your things. Maybe you're wanting to have access between when your offer is accepted and when you move in. Maybe you want to be able to go back in for furniture, to measure furniture, things like that. So that can be negotiated as well. You'll also want to make sure that, when you move in, the appliances are going to be in working condition. The last thing you want is to get, the keys to your new place and find out that none of the appliances work. That would probably be problematic. So that would be potentially one of the terms of the contract. And just to be clear too, all of this stuff can be negotiated, and I'll talk about that at a later time. And then last but not least, you'll probably be talking about price. So what you're willing to pay or what you're wanting to pay for this home and what you think it's worth. And that'll be, a conversation with your realtor and part of the whole negotiation process. So some of the typical subjects that you will see, or conditions or clauses in offer, frequently there'll be an inspection, frequently there'll be a title search, frequently there will be a financing subject, unless you plan on buying all cash if you're a first-time home buyer. Likely not, but perhaps maybe you're getting a giant gift from friends and family to buy a place outright. That'd be pretty neat. Strata documents, likely here in the Lower Mainland, your first place is probably going to be a stratified property. So you'll be reviewing the strata documents. You'll be also looking at property insurance as well as strata insurance. You'll be looking at a property disclosure statement. I have a Santa clause in here as well, just to see if you're still paying attention. And just to be clear as well, these aren't every single subject and clause there is out there. There's other ones like probate, backup offer, subject to sale, a bunch of other clauses. There's tons of them. These are just, I would say, the more common ones that you would see on a property. And I think I'll take a step back here too. So what is a subject or a clause? So typically a subject, or what a subject is it is a piece of a condition in which more due diligence is required, and you have a duty to do that due diligence between getting an accepted offer, removing that condition, and following through on that offer. So as an example, if you have a inspection subject between getting your offer accepted and when it needs to be removed by, you would have a duty to do that inspection. You would hire somebody to go into that property and do that property inspection, and they would give you that report card of that, of the property to say, the life expectancy of these different things. And then that helps you make an educated decision on whether or not you want to follow through with that purchase. So I kind of just talked about this, but what is a property inspection? I like to think of it as a home report card. So the inspector will come in and tell you, the life expectancy of some of the different components of the home. They'll let you know if anything is in functioning, or what is in functioning in proper order, working order, and what isn't. Maybe they'll test and find out that there's a water leak in a dishwasher, or maybe they'll find that some grouting needs to be done in the bathroom, or maybe they'll find something larger, like heaven forbid, like a pest infestation or something like that. So they're there to kind of do a whole home report card. I think one of the things that's a misconception is that, inspector will come in or pass or fail. It's not necessarily that. They're there to kind of look at a, 100,000 foot view and look at all the different components and let you know where everything is at. Sidebar, we had an awesome interview with Chris from Ridgeview Home Inspections. Awesome episode. Go back and check that one out if you want to hear more about what home inspections are. Next condition that you'll often see, and this is when, Cole and I high five in the hallway, financing. So you would have a condition to, in order to get your financing approved on the purchase. So think of this as like value assurance and purchase eligibility. The bank wants to make sure that if they're lending you hundreds of thousands of dollars for a purchase, that it is worth what you are offering. One, two, that you are able to make those payments and that it'll make sense. And if they're lending you money, they want to make sure that they're lending you money on the right thing. The last thing the bank would want to do is lend you $1 million in order to buy something that's worth $100,000, because in the event that that happened and heaven forbid you default on that mortgage or something happens, the bank isn't going to be able to get their value back, which would be problematic for them. So they want to make sure that what they're lending you money for lack of a better word, makes sense, if that's fair to say. We'll be reviewing the strata documents. This can be a very heavy or robust set of documents. So I'll kind of, again, skim through these. The Form B is a document that you'll see. This is basically belongs to the specific unit that you'll be looking at. So it'll talk about how much is in the contingency reserve fund, which is like the savings account for the strata. It'll talk about if the unit has parking or how many parking stalls it has. It'll talk about if it has a locker, where that's located or what that number is, as well as some other things. There'll be meeting minutes. So your strata meets for an AGM once a year, which is the annual general meeting where they'll vote on larger projects that are going on in the strata or things that need to be done. There'll also be council meetings, and those can happen everywhere from a month to 3-4 months, sometimes longer, where the strata will meet to discuss some of the different items in the strata. There could be a depreciation report in those documents as well. That is like a giant inspection of the whole strata, so not just the units. It'll look at everything in the strata that belongs to strata. So it'll look at the roofs of all of the units. Maybe in a condo building, it'll look at the elevators and the boiler age and a bunch of different items. That's a great thing to look at as well. The strata's insurance will be a topic. So not only do you get unit insurance, the strata will also have insurance for the whole strata. So that'll be reviewed, as well as some of the financials for the strata. So what do your strata fees actually pay for, and what does the strata actually pay for? So some buildings we look at as an example, your gas and your hot water is included in your strata fees, which is awesome. In some buildings, it's not. We've seen some buildings where your cable and internet are included in your strata fees, which is awesome. And I would say that's more rare, but you want to know what is included in your strata fees, what exactly you're paying for, so that you know exactly what you are buying. Typically, the bank will want to see these as well. So typically, these are shared digitally between people. So in like a Google Drive or Dropbox, or like a full document, basically. You'll also probably review the title. That is great to chat with a lawyer about potentially, as well as your insurance. Again, not only for the unit, but as well as the strata's insurance for the whole property. Once you do all of your due diligence and you feel comfortable proceeding with your purchase, you will remove your subject. So you'll fill out a document that says, hey, we approve of everything with the transaction. We are going to remove our subjects or remove our conditions. And at that point, it becomes a firm sale. Yeah, it's very exciting. And that is when you will give your realtor your deposit that they will turn into their office, or their brokerage, I guess I should say. So once that's done, you're basically committing to purchasing, and that date or that completion date can be whatever is negotiated. So for some people, it's 2 weeks. Some people, it's 2 months. That's all going to be part of the different components of the offer. Always good to chat about as well what not to do between subject removal and moving day. Cole will probably have some things to say about that. You don't want to make any big purchases. So you don't want to change your debt or income ratio. So typically the bank or whoever you're getting your mortgage through is going to approve your monthly expenses or your expenses in general based off of, what you can make for a payment. If you bring on a boat payment or a car payment, the bank might not think that you're able to make those mortgage payments anymore because you're changing your income and debt ratios, and they could potentially pull your financing, which would be not good. You don't want to quit your job, which again seems pretty straightforward. The bank is assuming that they're lending you money and that you're going to be able to make those payments based off of your income. If you remove your income, that's going to be a problem. And I'm sure there's some other things that you could think of would be a bad idea. How do you start now? If it's something that you're wanting to do in the future and wanting to start saving now, again, reach out to myself or Cole, have the chat with your parents, have the chat with your children as well. It's great. We can't stress enough to look into that first home savings account, open that account, do it before the end of the year. That's so important. But yeah, Cole, anything to add?
No, I couldn't agree more, Austin. Open the account because I didn't mention it before, but you can carry over some of that contribution room. So if you're looking to buy soon, you can actually contribute more to it. And then you can, as I mentioned before, get some tax credits for it, as well as withdraw it without any tax implications. So yeah, and going back to his last slide quickly, just don't do anything, quite frankly. Like everything the same. Don't change your job. Don't change any of your financial obligations. The numbers still might work, but it's only going to add more difficulty. So if it can wait until after everything's closed, the mortgage is in place, then that's the best approach to take.
Yeah. And again, it doesn't mean that you absolutely can't buy a car or something like that, but it'd be good to have a conversation with your mortgage broker or Cole, assuming that you're going to be using Cole because you should be. Yeah. So in some cases, it can work. You can punch that in and say, hey, this is what we can make work. Just have the conversation before, not after. And with that being said, too, once you move in, probably also not best to just kind of start throwing money around and do whatever the hell you want. So still be kind of, fiscally responsible, for lack of a better way to put it. But again, if you have any questions, we're always here to help. Thank you guys so much for your time. This was a bit of a longer episode, but definitely wanted to provide that value and give you guys that information. And we'll see you again next week.